everybody. Welcome to the High Performance Trader Weekly Recap Trade Review, right? So the goal today is to break down the week, break down levels we found, identified, traded off of, right? I really want to break into, this week was really big. We had CPI, right? We had tons of volatility in the market. Yet our edge has presented itself like always, right? So my goal today is to really dive deep into what exactly is behind our edge, right? So we talk about this all the time. So I found a lot more success and consistency in my trading once I learned to really understand the market as an auction, right? And because at the end of the day, right, we have a market in front of us, right, with buyers and sellers. Now, based on supply and demand, right, where demand being that these are areas we're looking for buyers to show back up, right? So here's a little demand zone right here. So based on supply and demand, that being demand, and then we got supply, we'll just say right here, any area where sellers tend to show up, right? So based on these two levels, we look to capture the market imbalance in between, right? So my goal today is to really go through the week, see how this, how our edge presented itself, how I use the break and retest, right, as a trading strategy that helps me understand market conditions, right? Because I'm always talking about identifying and adapting to market conditions and why that helps me so much as a trader. And in reality, I want to trade with the overall trend of the market. I found much more success doing that versus trying to counter trade large money or smart money or whatever we may call it, right? So I'm really pumped you guys showed up. What's up, Darren?
Yeah, it's great to see everyone in here today.
I know. I'm
more people than we normally get.
I know. I am super pumped, dude.
Love to see it.
Absolutely. So, all right. So we're just gonna dive right into the week now. If anybody at any time has any questions about anything, you can message me. You can literally talk, speak, whatever you want. It does not matter. This is the main goal here is to just learn and to break down trades and to sharpen our edge. So at any time you have any question, feel free to ask or just soak in.
Let's also make time towards the end for trade review.
Yes.
So like once we've gotten to our main points, we can open it up, and if anyone wants to talk about their trades, have us review them, or just has any general questions, you can
Perfect.
do that at any time, or towards the end we'll probably make more time for that.
Yeah, perfect. All right, so first things first. I'm gonna whip out the daily. All right, actually, I'm gonna whip out the 1 hour. I have been using the 1 hour, religiously. I think a lot of you guys know this, but I'll whip out the 1 hour to get a general idea of who's in control of the market. Now, basically, in a nutshell, our job as traders is to make money, right? So the way I make money on a consistent level is to understand who is currently in control of the market. Now, these chart patterns happen on 1 hour time frames, 5-minute time frames, 4-hour time frames. It does not matter. They consistently show up and they consistently give us an edge, right? So over here, you'll see you got like a double bottom over here at this 451.75 level. Now, this level played a very vital role in this week's price action, right? So I just want to whip it out. But so this blue line right here, let me just get rid of, or no, it's okay, I can leave them. So this blue line right here, this 451.75, previously in the beginning of, at the end of July, this was a level of demand, right? This was support. This is where buyers continue to show up. Now, once again, we call this demand, we call this support, because every time price comes into this level, buyers defend it, right? So we kept getting a bunch of retests here at 451.75. Buyers were defending it, causing price to rise and go higher, right? But this week, I'm not sure, actually, this was 8-2. I think that was Friday. But we finally broke this level. So when breaking this level, right, this set a whole new different context for conditions this week, right? So we started to, see a little more sellers coming into the market. So let me whip out the 15-minute time frame. Okay.
Yeah, Friday we ended the week with that break and retest to the downside.
Right.
Uh,
Which was
crazy. I guess non-farm payroll data was that day.
Yeah. This see, and this was a little confusing here because we actually broke past this 551.75 level and then rejected it. And look at that rejection though, right? Because, and I'm not gonna lie, I was a buyer right here on Friday, right? So when we broke past this level of 451.75, invalidating my break and retest to the downside, right? I was expecting price to sell off here, but it didn't. So once again, identifying a strategy, right? A break and retest to the downside, but then buyers defending the level versus sellers, which to me was extremely bullish, right? So I actually took this long above this, and price, it went up and then started to retrace, right? So, and once again, these things happen. This is a part of the game. This is why I use trailing stops very often, right? Or if we were to break into this trade a little deeper on a lower time frame, you can actually see the break and retest to the downside at this level. So really cool because I've been using that for trade management a lot lately. So, but that was Friday. Let's break right into Monday. Okay, so this bar right here is kind of screwing things up. Does everyone else have this bar on their?
Yeah, I definitely saw that. It confused me, but it happens sometimes.
Yeah, you gotta adapt.
I have no idea what causes that.
All right, so Monday. So every single day, right, we break out end of day, right? That's a critical level that you're always gonna want on your chart, right? And end of day is literally the closing price. So every day at the end of the day, you mark where end of day is, right? 446.78. Then I got previous low here. All right, let me whip out a smaller time frame too, so that we could.
Something about Mondays that I know I mentioned in the Discord, but I guess there's some new people here. But for the last 4 to 5 weeks, every single Monday has traded within Friday's range. And on top of that, it's been absolute chop, like no continuation.
Yeah.
So take that into consideration. That's exactly how I approached Monday. And if you are going to trade in a certain direction, realize that trailing stops are probably going to knock you out. And you have to be ready for holding your trade for a longer duration because there's just a lack of continuation.
Yeah.
And instead of looking.
Oh, I think we lost Darren right there. All right. Well, yeah. So Monday was definitely pretty choppy day. I mean, we had this level previously, right?
Like Thursday and Friday, the last month or so has been better.
Yeah. I mean, when I look at my statistics, I make the most of my money on Thursday and Friday.
Yeah, that's pretty weird. Yeah. Now Monday really it did, and days like this are going to happen, right? And this is why intraday levels are super important for me. Because you're not always going to have a picture perfect day, right? The market is literally, it just consistently throws price action at you, and we just must control our behaviors, right? Like that's the biggest thing for me on days like today, or I'm sorry, on Monday. Like if my edge really doesn't present itself, it is what it is. I actually believe I got stomped out this day on a. Oh, actually, no, this is the trade I took. So everybody knows I'm always grabbing my levels from the day before, right? So we had this level right here, 449.88. Literally marked that level, previous day low and then previous day high, which was much higher, right? I'm just going to lift that up to there. So we had like this massive range in between Friday's price action. So I noticed price kind of rallied into this 449.88. And I feel like 450 is kind of a psychological level anyways, whole number. So price kind of rallied past pre-market high, but I did not get a nice break and retest off this level, right? So I always identify pre-market high, the highest price in pre-market, and I want to see if buyers defend it. Now, if buyers defend this level, this 44910, right, I'm looking for a move, maybe targeting, we'll just bring out this previous level. I mean, a lot of people ask me about entries and exits. Now, it's so important to understand, if price is going to continue in a bullish fashion, it's going to retest the previous day levels, right? So, and basically what you're doing is identifying where sellers were previously, right? So we had a very large seller here at 451.77. We obviously had a very large seller at this 451.75 level all the way up top. So as price is turning more bullish, right, and we're starting to break past these previous supply zones, you want to see nice retest on these levels with volume targeting the next supply zones, right? So we couldn't get past this 449.88 level. I took the market short right here. I don't know if you guys can, that arrow right here, I'll just put it right there. I took the market short right here, and because we had this break and retest off this level. Let me whip out the 2-minute. It really shows the strategy so well, because this is what I've been doing too. And Todd, I know we talked a lot about this, but the whole lower high, right, and then trading below it. So price rallied right here into 449.88, rejected. Then we got this lower high right here. Let me get rid of this guy. Now this is vital to see in any reversal, right? So price rallies right here into this supply zone, comes down, makes the lower high. Now here's my critical level right here at, and what I'm doing here is just grabbing a level that I need to see buyers defend. If buyers defend this level, I'll continue bullish. But if we break through it, I want to come up for a retest right here and then take the market short, right? So here's my short.
Is that intraday?
Yeah.
Was that level from intraday, or is that from the day before?
No, it's actually from the day before.
Oh.
So let me show.
My bad.
No, that's fine. So that level, it's pre-market high actually.
Oh, right.
So price literally, buyers tried to defend pre-market high, couldn't hold it, came back down, just extreme chop here. Then price tries to hold pre-market high again, couldn't. So this is where I was like, okay, sellers are defending this. And then price came down, broke the open candle, which I thought was extremely bearish, right? We'll call this level the open, right? So open is also a super important, critical level that you want to trade off of, right? So we came down, touched the open, got buyers, and then price kind of rallied back up, but didn't touch my stop loss yet. Took her back down, and then once we got this rejection back above the open is when I got out of the trade, because I kind of figured buyers were going to hold this and then just continue to get a lot of chop. So
yeah, these days, especially you could have let the market play out for the first half hour of the day. You could have seen how price is chopping back and forth. And once you see that lack of continuation, I would just be ready to take profits earlier on days like Monday when you know there's going to be chop. I don't see any great market imbalances here. Obviously, they are on a smaller time frame, but I guess on days like this, wouldn't you say take your profits earlier would make a lot more sense?
Absolutely. And it's really important to understand something here, though, right? The market here, this was literally almost $1 move, right? And that's still a very good return. That's still around a 50, 40, anywhere from 40 to 60% return on your investment, right? So we talk about base hits a lot and setting expectations for yourself as a trader. And absolutely, if you got to snag your profits, take them. And I actually recommend that anytime you are trading within a range, right? I'm a big continuation trader, I like trading the breakouts above supply zones, like targeting way up high. But once again, that's not always going to present itself. So our job as traders is to really be able to be formless and to that's why I'm constantly saying identify and adapt, right? Like adapt to any situation, and taking profits is adapting. So yeah, I want
right, but you have to realize that the reason you're taking profits early is because you're seeing chop. Like, it's very easy to take your profits and then see the market turn back around, and you're thinking, man, I'm glad I took my profits early.
Yeah.
But you don't want to necessarily always exhibit that behavior,
Well,
because if you're always taking profits at 30-40%,
Yeah.
that's not going to be enough to count for your losses.
Exactly.
So realize that if Monday is a day when there is high chop, take your profits early, but don't let that behavior necessarily carry over onto the rest of the
trending
days of the
day.
week, you know?
Absolutely, right? And that goes to really understanding the market conditions, right? So the reason why the open right here played such a vital role. So anytime I get into a trade, right, and you guys will see it in my pre-market plan, there's first target, second target, third target, fourth target, right? So this is very important because even though, right, so I entered this trade short here, it rallied right into the target. That would be my first target, the open, right? Because I need to see sellers then defend this level to play, because I'm sure I had an idea to capture a move here to pre-market low down to 4478, right? But the market then gave me a different hand, right? Like we relate this to poker, right? Where the flop, you want to play a bet off the flop, right? So if you're playing poker and the flop is the first three cards, right? Based on those three cards, you'll then add to your position. Same thing with trading, right? So what I'm doing here is identifying a move off here, right? This will be like your hand, right, in relation to a poker play. And then price then breaks below this level, right? So this is where I enter the trade. We'll say I have pocket aces and an ace comes up, right? So
Josh, you're cutting out. You're cutting out a bunch.
Oh, am I?
Yeah, but you're back. You're back.
Okay. So yeah, so basically in a nutshell, my first target here is the open. And then based on whatever happens here, I'll either get out of the trade and then target the next target. So anyone
Your
else?
stop was only like a 30-cent stop, huh?
Exactly, right? Now, that's literally, hold on, let me find that day. I just lost it. What day was that? 8-2? Hold on.
Yeah, Monday.
My bad. There it is. Yeah, exactly, Todd. I literally, now let's flesh that out real quick. So if you're taking, the reason why I love this strategy so much is your stop loss is so tight. Like if you're taking this trade short, my stop loss is literally right above this line. Now, it's important to realize here because, right, people be like, well, Josh, it did go above that line. But the candle did not close above this line. Now, it's so important to really understand that the candle tells you so much. Now, if this candle closes above this level, now that is my stop loss. This is when I'm getting out of the trade. But if the candle does not close above it, right, this is still validating that sellers are in control of this area. Right, Todd? Or Todd, where would you have your stop loss in this trade?
Right above that big red bar, the entry bar.
Right here, right?
That.
Okay.
Yeah, right where your cursor is. Yep.
Right there. So now you're literally you're risking 30 cents here to make a potential $1 to $2 move. So that right there is why I absolutely love this strategy and why it helps me generate consistent results. Because, and I'm not saying it's the only strategy that does that, but all I'm saying is it's very easy to implement this strategy even on a choppy day, right? Because you're literally risking 30 cents here to make, a potential move all the way to the downside, right? So
I think QQQ gave us a really good demand rejection from the previous day.
Okay.
From Friday. So basically, it created a demand zone with a lot of volume in the last like 10 minutes of the day, and it also provided a good end of day rejection and low of day rejection, which that could have given you confirmation.
Yeah, and now I think it's, oh yeah, that was perfect. Look at that. Yeah, so this is actually a perfect example of our strategy. So let's do QQQ real quick. So literally, you have end of day right here, right? EOD. Just make it yellow so it's easier to see that. And once again, from pulling levels from previous day, they still played a perfect role. And it's so important to understand these levels from previous days, right? A lot of people ask me where I get my levels, and it's literally from the previous days. It's from, there's a bunch of different ways to get them, but previous days are very important. And now this level, previous day low right here, was support for the whole week until Friday. So this purple line right here. So previous day low, which is literally what it means, the lowest price from the previous day acted as perfect support for the next day here. Now, end of day did as well, right? 372.08. Price literally came down, touched it perfectly, and look at that. And now this is why.
So
What's up, Dave?
I took that. I actually took that off of end of day. So but basically I had my stops in. I realized that market was getting choppy. I wasn't seeing any continuation, and I got out of that trade for a very, very small loss, just because that was my edge. That is my edge to go with buying pressure off of end of day. Yeah. But if I didn't see any continuation, that's perfectly fine. I waited until price came down. I entered on the exact same criteria, and I caught that beautiful move all the way up for like 150% profit on that trade. So like, it's fine if you take that and you don't see continuation. You have a stop. You don't need to wreck yourself and say that the first move needs to be in your favor. You need to be able to stop out. And I re-entered on the exact same criteria and easily doubled that loss that I took at the beginning of the day. Yeah. So it happens that your edge presents itself, and then you see no continuation. This is why you have risk management.
Absolutely. And know what's really cool about this, and I want to just show it, is price literally comes down to previous day low here, tags it. Look at, you get a beautiful Bayesian candle, right? So for everyone that doesn't know, super long wick, right, where the body is less than 30% of the candle, right? This is this is a candle you want to see in a supplier demand zone. And look where by the end of the day, it literally rallied all the way to the previous level. So that's why I'm always grabbing these levels from the previous day. It literally rallied. Hold on. It is a perfect imbalance right there. So when we say market imbalance, that's literally what we're talking about. We're talking about previous day low up into another supply zone. So a lot of people with entries and exits, right? So say you enter the trade long and you're looking for a target, always pull from, there's tons of places to pull from for targets. You can see, look, pre-market high, that was even met with selling, right? So that's telling you a seller was there. And then the next level. So, my goal here is to identify levels that are going to have volume in a battle at, right? So that's literally, you're going to see stuff like this around previous day low. You're going to see stuff like this right at end of day. And then this is how, we look to capture those moves. So
that day, I took pre-market data off, and it made everything so much more clear.
Yeah.
Because imagine it's basically a gap fill,
Yeah.
It's a classic gap fill.
Exactly. Look at that.
Yeah.
Look at that.
Sometimes when you take off pre-market data, it makes so much more sense.
Exactly.
Right there, yeah.
It really does. I mean, look at, so here we go. We're opening way above the previous day close. and then price literally sells off to it, and then price then rallies and then comes down and touches it, right? So yeah, that was, I actually went, I went for that trade. I tried closing that gap. But yeah, so that was Monday. I'll go back to SPY over here. Oh, Tuesday was a great day. Now this right here, and once again, I'm going to leave pre-market data off for this right here, because this really, let me just get rid of some of these lines. I don't want all this confusion up here. All right, so let me move this. That's previous low. Let me just. Yeah, I know that right there was.
That was perfect.
This was a beautiful trade. Now I wanna, and once again, I use the same exact levels, right? So right here is previous day low, the lowest price from the previous day. We open right around it. Let me whip out the 2-minute because it really shows this perfectly. And you got to think what's happening here, right? So price opens right at previous day low, starts to sell off. We come up for this retest here and get met with selling immediately. This is when I enter the trade, and my stop loss is literally above this candle. So once again, we talk about risk reward. I'm risking 17 cents here, and my target is still this little demand zone here. So we're risking 17 cents, right? Because if price goes up 17 cents right here, that invalidates my strategy. That means my setup in my trade plan was wrong, right? That means I'm out of the trade. I'm not questioning. I'm not looking for the next place where sellers may come in. Nope. My analysis was wrong. I'm out. I'm taking the loss. On to the next. And then price literally just sold off perfectly into that zone. And now what's really cool here is then you just literally keep breaking, retesting all the way to the downside. And then, so this is what helped me stay in the trade, right? Because now I just keep moving my little bar here down, right? And then price comes into demand, and check it out. You still can't get it above that little consolidation point, and then get met with more heavy selling. And then I literally move this down to here. And then once price came up and the candle closed above it, I'm out of the trade. That's it. So that right there literally helps. And based on how confident you are with this strategy, you can hold it as long as you want. But what's really important is to give ourselves clear entries, clear targets. Because, and this has happened to me a lot before in the past, is on a trade like this, I'll be up 50% to 100%, maybe even more. And then that greed kind of settles in. And you're like, okay, this thing's going to go down, because I didn't have demand. I think my next target, let's see, it was this day right here. My target was literally from this candle. So, there was a lot more to go. But once again, you could always re-enter into these trades. Or no, it was this day right here. But yeah, it was that was a really good day. But hold on, let me get back to right here. So let me find. Did anyone else trade this? Anyone else trade this day any differently?
I took the short off the on the 2-minute. I think it's the GBI.
The green bar ignored right there.
Yep. Stop above. That's where I took it.
Yep. I like that green bar ignored, because it's literally buyers are showing up and sellers are just eating them alive.
Yeah, it gives you a good place to put your stop loss.
Yep.
Tight.
And what's really cool here, right, is we obviously identify a break and retest to the downside, But this level right here played a very important role because once price got above, right? So we get this inverse head and shoulders, right? And it's really important to understand. Right now, we're selling off. I am 90% bearish. I am constantly looking for shorts. I'm constantly looking for shorts until we hold this line right here. I'll make it green. So once this line gets, once buyers can defend this level, this 44640, I'm staying in my bearish state of mind. But you can see here, once buyers then defended this level, right, we start to get a reversal to the upside, right? So it's really cool when you start to look at price action this way, right? And using it to validate who's in control of the market, it's going to help you make better trades every single time, right? Because what used to happen is, say this was a demand zone here, right? Which I'm sure it was. But say price came down into here and, I'm like, okay, we rejected demand. I'm going to go long, right? Not waiting for this confirmation above this previous low or this resistance level. And then price then rejects it. And now I'm faced with holding onto a losing trade, right? And now I'm once again comes up, can't get past VWAP. Maybe I stomp out and then price rallies for the rest of the day, right? So it's the reason why I love to look at the market in this perspective is I will now not make the trade until right here for longs. You know what I mean? Because I don't want to get caught in any bull traps. I used to get caught in bull traps all the time. Price comes into demand. It doesn't mean buyers are just going to show up. So, waiting for this little break past this level, right? And then trading accordingly. I did not go long this day.
So, Josh, I'm looking back where we got that demand from. So back on 7/12, CPI basically shot price up.
Yes.
And then like halfway through the day, kind of found demand around 444.91, 444.94.
Yeah.
And if you draw that on the chart, you can kind of see we missed that on this day that you're talking about.
Yeah, ready? Let me pull it up.
We literally didn't even reach it.
Yeah. All right, ready? You said that was, let me whip out 30 days, 1 hour, 7/12, which was right here. Okay, so this was the last CPI.
If you tile the charts next to each other, you can see it here. Yeah. So 7/12.
Yeah. Let's see. Oh, yeah, right here. Here we go.
Yep. So like halfway through the day, we found demand there.
Yep. And it's really cool, right? So this whole gap up from CPI played a very important role this week, right? So last month, this little green zone I'm drawing right here was a gap up on the daily time frame, right? I'll whip it out. So you can see this gap right here, right? So we gap up large last month for CPI, and now this week we started to play with this level, right? So we started to retest this level earlier in the week, came down, touch, and then we finally broke into it, which is why Friday I was extremely bearish, right? I was super bearish, and it just goes to show whatever you think. It's the market's not going to do just because you think so. You know what I mean? It's gonna do its own thing. But
yeah. But anyway, so going back to that day, so we got that selling off of the open, and I went short. Could you zoom in on the 2 minute?
Yeah.
So we had that level which you mentioned.
All right.
So we had a level at 446.15.
Okay.
Or let's call it 446.25.
Okay. Hold up. My bad.
To the right.
Yep, right here. Okay.
Yep.
So 446.25. Yes, right here.
So we had that level defended in the beginning of the day.
Yep.
And then once we broke that level, that's where I went short with my stop above that level.
Right.
And I was targeting that demand that we just talked about. I was targeting there, and it never went.
Right.
And we never hit it.
Right.
But we were still defending that level, that 446 level.
Yeah.
So I stayed in that trade until we made a higher low, and then I ended up getting out of that position. But time decay actually killed me, and I was, even though I sold price at lower, time decay caused that to be a losing trade. It was small,
right.
But I only exited that trade when we made right there, where we made a higher low.
Yep.
And basically that told me that conditions were probably changing.
Yeah.
And now price comes above that critical level where we had selling.
Yep.
And I can only confirm that conditions are now bullish if buyers defend that level where sellers were once in control.
Yes.
And that is when I went long, targeting high of day.
Right.
And captured a beautiful move all the way up there.
Yep. And that's literally the epitome of adapting to market conditions. That is literally.
But I had to wait until we made a higher low.
Yep.
Because sellers were just still defending that level. That's still bearish.
Yep.
I have to stay in.
Yep.
My exit has not been invalidated. We've been making lower lows, and sellers have been defending. So I have no reason to get out of that trade until we make a higher low there.
Yep.
And now that's a bullish chart pattern. So now I'm exiting my position because that's a bullish chart pattern.
Yep.
And now I will go long if buyers can defend that level where sellers were previously in control.
Yep.
Now conditions have changed. That's our break and retest showing up beautifully. Now that's to go long.
Yep, exactly. And then and then it literally rips right past. I love when this happens, because this is going to tell you right here that it's like anytime sellers have no chance up against the open print, right? Like, look at that. Boom. Boom. And yeah, it was that's exactly what you want to do. And once you get to the point where you can watch price action happen and do exactly what Darren said, right? Like, okay, break and retest to the downside, going short, holding, higher low. Once you can identify this in real time, now you have such a stronger edge, because now you're in control of, basically your analysis is telling you get out of this trade. Instead of just holding and hoping it's just going to happen, right? You're going, okay, my plan isn't going accordingly, I'm out. And then what that does is it gives you the ability to be able to change the way you're looking at it. So now you can capture this move all the way to the upside, right? You're letting price action tell you what to do instead of
not my P&L.
Exactly, right? Because imagine
if all I cared about is my P&L, I would have got out after we made that first initial move. But no, if I capped my positions at a first initial move, what would happen if that price kept selling off and selling off and selling off and selling off
all
day?
Bank, yeah.
And I just captured my profit because I thought I had enough. No,
exactly.
I have to wait for price action to tell me to get out of my trade, not me being satisfied with the certain amount of profit that I made on a trade.
Yeah, and
that's the definition of letting your profits, being able to let your profits run.
Yeah,
and they didn't in this case, but I was at least open to that if that's what price action told me. I don't know if that makes sense.
No, it does 100%, because there was a time, right, when basically, I guess you could say my threshold, right, was like 30 to 50%. I just always, my winning trades, once I hit like 30 to 50%, and this is a fine line, right? Like, and I definitely want to talk about this. Like, a lot of traders go through a time in their life, right, where in the beginning it's easy to hold your winners, right? In the beginning, you're getting like 100, 200% returns. Like, you're just holding. And you're like, oh my God, this is great, right? And then you experience some pain in the market, right? And it's like, okay, I've gotten hurt. And now you're faced with a scenario where you're up 30% and you're like, okay, I'm going to take this, right? And yeah, that is okay. It's good. You need to take your profits. But if you're taking profits not based on strategy, but based on just money, that is going to, program your mind down the road to not be able to let your runners run. And this is critical.
Yes.
It's critical because I did this for like a year straight and I could never grow my account because anytime I was faced with a losing position, right, or this, that, and the third, I wasn't able to understand when buyers or sellers were still in control of the market, right? Instead, I was making decisions based on, okay, I got to secure this bag, this, that, and the third, right? And, and this is everyone's journey is different, but you're going to have to come to the point one day where you can enter a trade and be like, okay, sellers are still in control, right? Like that's how these people make tons of money in the market, right? Like, look at like, just for example, that stock market wolf guy. That dude was up $500,000 on a trade. If he was worried about taking his win at 30%, he would have never been there. You know what I'm saying? So it's like, and it's not easy. It takes time. It takes what I call the 3 C's, right? The confidence, the control, the conviction, right? To do this. And, so it's definitely, it's just be aware of it, because I literally did that for
you. You can't program yourself. You have to be very careful with programming yourself to take your wins quickly, because when you're in a losing streak, you're going to take your profits really quickly.
Yeah. And it's going to.
But then what happens is one loss or 2 losses wipes out like 5 wins.
Yeah.
And then you're like, wait a minute.
Yeah.
How did that happen? Your win rate looked great, but the problem is the wins that you had, you kept them so small that 1 or 2 losses just wiped them all out.
Yeah. And then.
To me, that's the most. What you just said is the most important part.
Yep.
Our job as traders is to cut the loss.
Exactly.
And it's the market's job to make you money. Our job is to cut the loss quick.
Yeah.
And you stay in the game.
Yeah.
Very good point.
Yeah, you're 100% right. I wrote that Friday in the Discord because I took a couple losing trades, and I literally said, I was like, your best offense is defense, right? Your best ability to make money in this game is to be able to knock out your losers. You are going to have losers. There's not a trader under the sun that is going to have a perfect day every day. The market just has way too many variables. So when you start to become consistent, right, is when you're able to go, and that's why hard stops work amazing for me, right? I'm not big on mental stops. Like, if they work for you, that's great, but they don't for me. I have to have something in place preparing me for a losing trade, right? So I'll buy my options for $100, just for example, and my hard stop, I put it in at 90. I'm only willing to risk 10 to 20%, sometimes even less, based on when I'm getting in a trade and what the criteria is. I find myself now taking trades with way better criteria than I used to, and that's literally what you're going to have to do to control that, because the more you get burned in this game, the harder it is for you to program your mind to win. You know what I mean? So that's why anytime I'm talking to like newer traders, I try to instill that off them very quick to avoid that whole stage. But I think it's unavoidable. But we're going to go right into the next one right here, right? So this day was beautiful. Now, there's a couple things I want to point out here. End of day was right here. Let me just label that. This is EOD, end of day. We had previous day high, a little above it. Now, this day is a perfect example of why critical levels are so important. And this right here is why I use them religiously. Previous high. Okay. Let's just make him like red or something. Okay. Previous high. We have end of day. We got this little critical level, which
that blue one is open.
Yeah, look at that. Yep. It's so crazy how all 4 levels on a candle, high, low, close, and open, right, on the daily time frame, play such a vital role in our job as intraday traders. It's nuts.
We're day traders. Those are the 4 most important levels on the chart to tell us
who's in control
and give us a target.
Who's in control of the market. Seriously. That's open, low, close, high. Okay, so now the lowest price is down here, right? So that's previous day low. This is a perfect example of how
you
we
should
trade.
also mark that level that we had. You got to leave that
Yeah,
that 446 level on because it plays a critical role.
yeah. Previous day low.
So
Okay.
this is one of the reasons why if I have a critical level, I'm leaving it on my chart
Yeah.
until it's completely invalidated.
Yeah,
Because that level right there, the
Yeah.
exact same level where we played off of that day,
yeah,
came into
Yeah.
play the very next day.
absolutely.
Break and read.
Yep. All right, so now let's kind of run through this without looking. All right, so these are my levels here, right? This is what my chart's going to look like every single day. I have previous day high, I have end of day, I have the opened, and then I have an intraday level that holds weight, and then previous day low, right? So there's our main four: open, end of day.
Pre-market plan right here.
Yeah. Oh, yeah, exactly. End of day, open, previous day high, previous day low. Now we're making, I'm going to put pre-market high, right? This is going to be a supply zone, right? That I'm looking for sellers to defend if they come in. I don't think they do, but still need to validate it. And now I have my demand zone down at previous day low, right? So we're presented with a very big range. Now I'm bullish as long as we're above previous day high for the most part. There's some other factors that could play, but just for this example, if I see anything like this pre-market, I'm looking for a breakout above 450.61, targeting 451.75 or 452.91, right? So that's like my idea for the day, but in no way, shape, or form am I predicting this is going to happen. That's why I always go through a bullish and bearish scenario, right? Because the day you think something's going to happen, the market's going to do the opposite. You cannot
You
ever.
don't even have to be bullish going into this day. Like you don't even have. All you have to do is be ready to play between these
Exactly.
levels with what you see. You know.
Exactly, which is why I run through, right, the bullish and bearish scenario.
Yes. Exactly.
All right, so we have previous day high, right? So right off the rip, price breaks it, comes right down into end of day, right? And we get some selling, or we get some buying, right? Let's see what it looks like here. So rips right into end of day, get a little, little congestion, and bam, we break right through it. Now, price begins to hover around this open level, but we're seeing weakness here, right? Price can't even come back up to end of day. I remember we put this in the Discord right about here, right? Because price ripped into end of day, rejected. In the Discord here, I go, okay, I'm looking for a retest off end of day, playing shorts to the downside, right? We never get that retest, right? We come up, barely touch it, and we get heavy selling here. Now, there's a couple different ways you can play this, and I'll just show you guys how I played it. Price rallies below the open, comes up, and I literally found this little level right here, found selling here, right? Because now that we've broken the open, I have to target my next critical level, right? I'm not looking for longs in any way, shape, or form here, right? We're sellers defended previous day high, they defended end of day, they broke through the open, right? That's 3 of my 4 levels defended. Now I'm targeting previous day low, which is super low, but there's also some areas in between that price may hit, right? So, and actually you can see here, this break and retest right here was definitely a pretty good level that was then defended, right? So this is where I entered the trade short. And it just goes to show, just because you didn't get in up top here, that's fine. When you have super large reward on the table, you don't have your target's literally, what is this, $2.50 away, and price comes right down into that level, comes up, retests it, and breaks down even further. So this is just a really good example here of defending previous high, defending end of day, and then defending the open, right? And then boom, price breaks below it. You enter short right here, Now there's a lot of different traders out there. Some traders will enter on a candle closing below the open. That's fine too. Just keep your stop relatively close, right? If I'm entering below the open or below this support level right here, I'm keeping my stop right above this candle, right? And then you could ride the move down. Notice you can't control what price action does. All what you can control is your entry, your stop, and your exit. Like, that's it. Once again, Todd, just like you said, the market, it's the your job's not to how'd you say that, Todd? The market's what's going to pay you. Your job's to have the good risk reward setup.
Yeah, you got to have you got to be able to cut the loss quick.
Yes,
and that's what's going to
yes. Our job's to cut the loss.
I took that trade at I don't know 447.60.
I did. Yeah, me too. Yeah, that's right when I got in it.
Yeah, and stopped right at 10-cent stop loss. You
Yeah.
know, that's the kind of trades I look for every day.
Yeah, super tight stop.
So, what about So I'm in this situation. I'm thinking about our break and retest off of the open. You know how we had that blue line there.
Yeah.
Like wouldn't that technically have to be your stop? That's where you got in. Like how?
I mean,
I don't know. I didn't take that trade because I would have had to stay in it all the way up until we hit open, and that was too much risk for me, and so I didn't get in that trade.
Now, in terms of risk reward, right? You're still only risking 40 cents here, Darren, to make a potential $2.50 move. So that's where I was at, right? This right here is 40 cents, right? Versus previous low target. So this is still criteria for me. I'm still okay with that. Now, do I recommend taking break and like, you know what I mean? Not really. But then again, another reason, that's why like I said earlier, if the candle closes below it, this sometimes isn't a bad strategy to enter and keep your stop right above it, right? Because then you could get in a little earlier. You still have a very good risk reward. So
it depends what your target is. In this situation,
exactly.
my target was the 446 because that 446.24 is where I went long the day before.
Yeah.
So I'm thinking if any large money went long where I did and it actually turned out to be a great move, I think large money stepped in there with me, and that's going to be my target because I'm expecting buyers to show up at that level. So for me, that was my target, and that's why the risk to reward didn't make sense for me in that scenario.
Yeah.
But
right.
I mean, it's all what your target is.
And that's exactly, and now what's really cool here, and this is how I was looking at it without pre-market data, right? I knew if we couldn't hold this open, right? And I didn't know this, but this is what I was looking for. If we could not hold this open, I was looking for a move all the way to previous day low. Boom, right? And now what's so cool here is that same level that you're talking about, Darren, played an insanely vital move once again in being able to identify buyers taking control, right? Because now look at this. Look at this acceptance right here, right? This is the move to the upside, right? Which would have been, it's so crazy that these sort of moves just get eaten alive. You know what I mean? Like this massive amounts of selling and then massive amount, and then just literally rips right back up into end of day.
Yeah, but check it. So you see that level,
and then sells
I was talking about, that 446 target.
Yeah.
That 446 target. So I was expecting buyers to show up there. When buyers didn't show up there, and now we retested it from the bottom, and sellers showed up, I literally took that trade short to the previous day low and made 70% on that.
Yeah.
Did I capture the whole move? No, but those buyers that I thought were going to show up never showed up. So now, if any sellers come in that area, sellers are now controlling an area where buyers were once in control. Bam! I'm playing with those conditions to my next target. And
Yeah.
even though it was a tiny little move, I think it was an exactly $1 move.
Yep.
It paid me like 70%.
Yeah, dude.
That's a good trade.
Absolutely. That's a super high.
And I was really proud of myself for not getting caught up in FOMO, because I didn't take that break and retest at the beginning of the day just because whatever, I just didn't like the risk on it. But I stayed ready for any other trades that I saw, and I took that trade right there. And I thought it was kind of crazy how like I was ready to stop out if we couldn't make a lower low, but that was my target to the previous day low.
Well, and once again, you're using critical levels to paint a picture for you, right? That's the most important. That's the if you guys learn anything from me, I want it to be use critical levels to paint a picture for you, right? Once again, 4 levels. You got the open, you got the close, you got the high, you got the low. And now we're intraday traders. So if you were to whip out the daily time frame here, I know I got lines everywhere, but let me just, for instance, this candle has a high of day, low of day, close, and open, right? So basically what we're doing is taking the 4 main price points of a daily time frame candle and then using them as an intraday trader, right? Hold on. And trading off those levels. That is it. That's literally what we do. That's my goal, right? So now, if this whole candle was a daily time frame candle, this would be the open, this would be the high, this would be the close, and this would be the low. So now, based off these 4 levels, right, just like I said in pre-market plan, we're looking to see how price reacts in these levels to take high probability moves targeting the opposing imbalance, right? So the open was not defended by buyers. This was our first bearish indication, right? Neither was end of day, neither was the high. So all 3 of these levels got invalidated immediately in the morning, right? Sellers were defending them. So now this painted a picture to target previous day low in a bearish market condition. So now it's literally, okay, what do I need to see to put on a trade with good risk reward? That's it. That's literally how I trade each and every single day. And when I do this, it just sets me up to make high probability trades, right? Instead of, there's no prediction here. It's completely reacting off these levels. And it's crazy. It literally happens every single day. You're going to get a retest on one of these levels. You're going to get something to happen. And, as a day trader, it's super systematic and just easier and more simple, if you ask me, to just trade these 4 levels. And obviously, like if you break out past one of these levels, now you're going to get a continuation, and then you're literally going to target a level from a previous candle. I just like using that analogy, right? So if we defended the open here, and if buyers showed up and then we got above previous day high, this would have been a perfect move targeting this level right here.
Once we see the retest.
Yes, right.
Because the bullish conditions are not validated until we see a retest. If you take that breakout, there's nothing to tell you that is bullish conditions. That could be a breakout. The only time it changes from being a breakout or a fake out to
a breakout
to bullish conditions is when buyers show up at that previous high.
Yeah.
So that is why we always wait for the retest to solidify those conditions for us. Because you don't know if you're trading a fake out or you're trading bullish conditions until buyers show up there.
Yeah,
that's the difference.
Yeah, and we talk about like the psychological aspect behind the break and retest. It's super important to understand, right? So, I just want to run through one real quick because it's really beneficial to understand. Actually, here's a perfect example right here. So let me whip out the 2-minute, because the more you understand the psychological aspect behind this chart pattern, that it's just going to help you trade properly, right? So the break and retest I'm going to talk about.
Believe in it.
Yes, exactly. You need to understand it to trade it properly. So let me just we'll just run through it real quick. It takes like 2 minutes. Okay, so we have an intraday, or we have a pre-market level right here, right, where buyers went long. So buyers, smart money, went long right here and made money, right? So this move right here, they took the market long, and let's just say they made like 40% return. Now they like this level. So we're making a little demand zone. So now next time price comes into this level, right, they take the market long. You can see a little green candle. These are buyers, right? And then sellers come in, boom. Now these buyers that went long here at 446.73, right? They go long again. Now they're in losing trades, right? Now these people are down 10%, they're down 30%, and now they're looking for a place to get out, right? They have very large orders. So they want to stomp out at
They want to make their money back.
Exactly. They want to get out of the trade with, you know, as least amount of pain as possible. So when price comes back up to this level over here at 446.80, this is where they stomp out of the trade. Now, when you are stomping out of a buying position, you're actually selling it. So when you stomp out, you're adding to the selling pressure, which then causes the price to sell off. So it's really
a trap.
Exactly. It's a trap. It's literally why this chart pattern works so well. And now that I've beat this into everyone's head so much, you're going to see this for the rest of your life on this chart. And it's going to help you understand who's in control. Because right here, buyers are in control, right? Buyers are in control of this level. Then price rallies down. They try to show up again, and they get, boom, sellers control it now. Sellers are now taking control of market conditions. So we must identify that and adapt to it. The way we adapt to it is to visualize the retest, visualize them stomping out. This is where you get the wicks. This is where you get the volume, right? You start getting volume, right? This is showing you people stomping out via volume, right? Price and volume analysis. You take the market short, right? And then you target a level, right? So that's literally like the psychological aspect behind the break and retest. And
why can we? Oh wait, zoom back in. So why can we depend on it happening? It's because smart money leverages insane numbers of contracts, and they cannot afford to say, we'll just wait till VWAP.
Yeah.
Nah, they get out mechanical.
Exactly.
They get out mechanical, and that is why we trust the break and retest.
Exactly.
And is it exact every single time? No. But it is enough of the time that we can use it as a strategy. And I mean, you can just see it repeating.
Yeah.
But this is everywhere. Why it works, is because big money doesn't fudge they don't mess around and say, we'll just wait until a little bit higher.
They can't.
If it's not going in their direction, they get out. They know they'll make money the next time.
Exactly.
And we know that because they're mechanical with their money, and we use that to our advantage. That is the whole strategy to me.
Yeah, and
that's another reason why those on that 2 minute, the GBIs and the RBIs are so powerful.
Yeah,
it's a trap. You just going with the bigger money.
Yes.
That's the whole reasoning behind those little RBI and GBI plays.
Yeah. And for anyone that doesn't know, that literally means GBI is green bar ignored, right? Or RBI, red bar ignored, right? So in this scenario, you're looking for green bars to be disrespected or ignored. And it's just and the reason, another reason why I love this strategy so much is your stop loss is always like 10 to 20 cents away. It's literally setting you up for a strategy that creates consistency, because to become a consistent trader, your wins must be larger than your losses, right? It's literally that. It's that your winners have to be larger than your losses. For you to actually make money in this game and to live that dream and that life you want, to become consistent and to make good money, your wins must be larger than your losses. So with this strategy, right, you're not leaving yourself vulnerable to, big losses as long as you control them. That's why I'm always saying the market cannot do anything to the trader who controls his behavior, right? Because this chart pattern in and of itself, this break and retest, is literally human behavior. Everything you see on this market, whether it's a double bottom, double top, right? We lose sight of this because we've never traded like in the pit of Wall Street or in a firm, right? But if you were in a firm, you would literally see large money going, all right, guys, buy right here. And then price would break, and then they would literally stomp out at their entry for minimum loss, right? And that's literally what we're betting on. It's literally the essence of the auction, and it's just like a double bottom here, right? Like, what's really a double bottom? Double bottom's just a smart money that bought 20 million shares here, and he likes this price. He wants this price. He valued the S&P 500 at 44528. He really likes it. So when price comes back into it, right, double bottom, price rallies, right? And now that you guys know that information and price action looks like this, all right, you're going, okay, the buyer that was right here is now stepping back into the scene, right? I want to trade with this guy. What do I need to see to trade with him, right? So I know it's not a trap. Okay, I want to see this level get broken. I want to see this previous seller get wiped out, validating conditions are now bullish. And that's literally what happens, right? This level gets wiped out, and now you play the next level. Now, what do I need to see here? I need to see this seller get wiped out. Boom, seller gets wiped out, next level, right? End of day. This seller at end of day had massive strength. He was not willing to let it go, and literally price then sold all the way back down to the double bottom. Like, so it's literally market imbalance back and forth all day. And it's our job to identify these high probable trades and trade with them. So it's all a perspective. The market is everything but a perspective. In the beginning for me, it was literally like I didn't look at it like that, and I failed. It was so hard for me to actually remain consistent because you want to hold and hope, right? Say you go short here. If you don't have that knowledge, what's really going to make you get out of this trade? You know what I mean? Like, you need the knowledge to be able to go, okay, buyers are in control here. I can't stay in this. You know what I mean? So that's why we stress that so hard. You know what I mean? Like, it's really cool.
That's the break and retest for you right there.
Yeah.
We convert on a setup that will tell us immediately if it's wrong. That's what I love about it.
Yeah. This next day right here was phenomenal. Check this out. This next day, right? We literally get, okay, so now once again, let me set this up the correct way. So we get, now this was a mind fuck, but excuse me. But if you were able to play your levels properly, you could have captured a very, very high risk reward, very good setup this day, right? So basically, we're going to use this demand zone down here. Okay, the day we're talking about is 8/10/2023, if anyone wants to check. But so this is what it looks like. Now, once again, we're going to label end of day, right? Because end of day is very critical. Once again, critical level. End of day is all the way down here. We got previous day high, which is all the way, actually, no. Previous day high and the open were the same, right? So we can leave that like that. And then I had this pre-market level that held weight. And then I had another level, that 451.77 level, right? So so pre-market plan this day is literally, if we can hold the open, right? I'm looking to play longs into 450.61. If we hold 450.61, I'm looking to play longs into the next supply zone, right? Remember, guys, we're just going zone, 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 right? And then I can't make any prediction. All what I could do is keep my eyes on these levels and then let price action tell me everything else, right? So was this CPI? Yes, this was CPI.
It was.
Yep. So then price, okay, so we get CPI, right? We get all this crazy congestion, and then price rallies, right? So let's open it up. So first thing I noticed was a nice break and retest off previous day high, right? This was my first entry on longs, right? Price rallies, comes up, tags 450, the same exact level we already had, and literally it doesn't hit the next level, right? So now we get this congestion, right? So price then breaks, and I like this because you get the lower high here, right? I actually entered more of my on my long position on one of these pullbacks. I think it was right here. It was not a good trade. Once again, I did not get a good retest of my level. And then price falls below 450.61, right? And now conditions are now changing from bullish to bearish, right? And now this 450 level played a significant role, because now we've broken below. We start playing with 450, and right now I'm not making any other trades. I'm just letting the market play out. And then we come down to the open here. End of day is way below, right? So anything below the open, I'm looking for a move down to end of day, right? If price can break the open here, I'm looking for a move down to end of day, down to previous day low. Once again, we're using our price action in these levels to tell us what's happening. And now what's really cool here is price rips right in the previous day high. We sell off right below the open, come up for a perfect retest at the open. This is your short entry, right? And then price then, boom, starts to sell off. Right in the end of day, right in the previous day low. This trade was awesome. This was a very good trade right here. This trade right here, I had so much confidence in because literally right below, break the open. Let me get rid of pre-market data. You could really see the gap being filled here, right? Look at this. This is crazy. Price literally rips. Got the open right here. Breaks below it. Perfect retest, right? And then you sell right off. And I love how it came back up. And shout out to everybody that held this trade, right? Price literally came right back up to 448. Now, this doesn't look like a lot, but this move right here was literally $2. $2 move, and then all the way to end of day, this was like a $3.50 move, right? So this was a big move right here. But what's cool here is it's literally a gap fill. Now,
and this is the definition of why you have to follow price action to get out of your trade. You don't take profits based on your P&L. You take profits based on the break and retest being invalidated.
Yeah.
Because all of these break and retests all day, those are bearish chart patterns.
Yep.
And they keep on showing up. One, all the way along. Again, all the way to the downside until we reach yesterday's lows and end of day.
Well,
and if you're the type of trader who gets out of your trades because you're up 100% and you're like, I've never made 100% before. This is insane.
Yeah.
Your wins are not going to be big enough to outweigh your losers. This is why you have to follow what price action is telling you, and until it's invalidated, then you can get out of your trade.
Yeah, I mean, look at this. This literally came down to end of day and to previous day low, right? Now, it's once again, we can't control price action. All we can do is control ourselves. This was a really good day setup. That was perfect right there. So this is literally our edge. And hey, listen, if you enter right here short and price rallies above it, that's fine. Just get out of your trade. That's it. You know what I mean?
You know it shows up again and again. You don't need to hold on to trades that invalidate that break and retest. You can wait for days like this, stay in, and capture these massive moves.
Yeah,
and they'll account for all of those times where it didn't obey your process and you stopped out.
Yeah, and it's really important to understand, like, these $2-3 moves. I mean, these happen very consistently. Like, these happen a lot, right? So, and what's really cool also to understand, right, is so say you go short right here, right? Because I think there's an example that I can show you guys tomorrow, or on the next day. But say you go short right here, right at this oval, and then price breaks above the open. That's extremely bullish, right? Because that means, now that you guys understand the psychological aspect of the market auction, validating the break and retest, what we just ran over, right? With all these buyers getting stomped out here. But say price breaks above this open. That's telling you that buyers didn't get stomped out. Instead, they're strengthening their position, right? So once again, here's a bearish chart pattern, right? A break and retest. But if this chart pattern gets invalidated and buyers show up, now market conditions are bullish, and I want to play longs targeting previous high or whatever levels that's next. So, get in the habit of looking at chart patterns, and just because they don't work, it's not what the chart pattern's telling you. It's what it's not telling you. that really is valuable as well. You know what I mean? Like if a double bottom is invalidated and extremely bearish. I think you said it before, Todd. Trading's like real estate. It's about if you're wrong at with your analysis, like say you want to go short and you're wrong, usually price will rally in the opposite direction, right? You were just wrong in your analysis. You were right at the price. You were just wrong on the direction. So, yeah, super.
Continuation trade right
yeah, that's perfect. Once again, that we made off previous day low, previous day close, previous day high, in the open. Right? Those 4 levels as day traders are critical. They are literally
and days like that, if let's say you only show up to the market at noon or whatever, you had something going on, you couldn't approach the market, and you've seen the market selling off like this, don't immediately feel like you have FOMO because you've seen it do a big move. If you see a bearish chart pattern, a bearish break and retest forming off of a critical level, don't just assume that, oh, the market's already red, it has to turn around. If you're seeing bearish break and retest, you play with that until you see a bullish break and retest, then you play longs. If you're just sitting around trying to predict the bottom all day and say, no, I'm going to go long. As soon as you see a couple green candles, you're just going to get burnt all day. That's why you keep seeing bearish break and retest. You take that until you see market conditions change.
Exactly. Yeah, I did that for a very long time. It's selling off. It's got to turn around soon. That's another reason why we'll use the break and retest, right, to validate. Okay, these have changed, right? So Friday was a pretty rough day, but I do want to break down one thing, right? So once again, you got your previous day high, you got your previous day open, you have end of day, you have previous day low, right? So there's our 4 levels. Obviously, there's other levels that I don't want to get into right now. But check this out. So what's very cool about this day, right? So usually when price opens below previous day low, and it looks like this is very bearish. Usually you can get a move to the downside, right? You're opening below previous day low, and this previous day low was literally demand like the whole week. Like price bounced off it multiple times. So this was a very strong demand zone I was looking to play longs off of, but price broke below it. Now, I did not take this trade short in the beginning of the day. I'm actually pretty surprised I didn't, but price then rallies up past it, right? This is just like I was saying. This is a break and retest to the downside, invalidated, right? So if you're looking for shorts right here, right? Let me make this red. And this is extremely important. So if you're looking for shorts here to the downside, price comes up, tags it, starts to sell off, can't make a lower low, and then buyers defend this level, that is an extremely bullish indication that conditions are now changing. And you want to trade with those conditions. Now, I did not take this setup, even though it was perfect. Hold on, let me and the reason why I didn't take it. Yeah, exactly. Well, look at all of these sellers getting stomped out here, right? All these sellers are getting stomped out. Look at the volume, right? Once again, price and volume analysis, right? Volume. Price rallies past previous day low, comes down for the retest, right? This right here. Higher low, that too. Yep, you got one high, you got another high. This right here should have been my move into end of day and then into the previous open, right? Now, I hesitated on this move, didn't take it, which once again, shit's gonna happen. No one's perfect. But price literally rallied right in the end of day. This right here is a $1.40 move. This is over 80% return. And it's so important to realize this is literally what we need to capture, guys. We don't need to capture $1, $2, $3 moves. Listen, you get good at capturing 80-cent moves to 100-cent move or to $1, you're going to be good. But once again, notice here, if I went long here, I'm targeting end of day, right? You must have a logical target, right? You don't want to get into, like we talked about before, just taking profits, right? But price rallied past end of day here, came down, kind of played with it, right? This is not a valid break and retest off end of day for whatever, but what it is a retest right here off 44547. This is where I took the market long. Price rallied, didn't go to my target, so I stayed in it. And now price breaks below end of day, breaks right here at, I think end of day was my stop. But what I want to show you guys that's really cool here is then price comes up and tags this same level. And this is when right, exactly, right? So now conditions are changing. So now price then sells off, right? This was one of the trades I took too. Price sold off.
Can you zoom in on that, Josh?
Yeah.
So it's a little bit easier to see on the 2 minute. There we go.
Yeah. Ready? Boom. How's that?
Yeah, that's that play we say damn near play every day. Is that play right there?
The lower high, right? Or so you get the double top. What I like to say here is I used to take the double top short. Now I wait. Price come up, retest the level where buyers used to be. Because once again, let's go through the psychological aspect. All the buyers here, me being one of them, are expecting to make money, right? Price then reversed on us, and then we want to get out of the trade as close as we can to our entry. So as price comes up, everyone starts stomping out right here. And when buyers stomp out, they're selling. So selling pressure being added, causing the move to the downside, right? Now, this level was just super strong, right? And sellers could not defend it. But I was literally expecting a move all the way down to low of day. Didn't happen. Once again, it's just we can't control the market. We can only control ourselves. So, yeah. And then price was just all over the place Friday. It was
a lot of chop. Not a great day.
Yeah. It just was kind of all over the place. I think I took another short.
I took that long from on the SPY. I took it on the futures, of course, but that 445.06 on that higher low when the green took out the red.
This one right here, Todd? Early?
Yeah, that was Friday.
Yeah.
I guess it's 10, 12 your time?
Yep. This one right here.
Yeah. Oh, that's beautiful.
Yeah, that's the
nice
one.
Trade.
That's the one I didn't take. All right, so let's run through why that's so pretty, though. I mean, you get a perfect break and retest off a critical level, previous day low, right? The green candle wipes out the red candle, right? Red bar ignored, right? Super, super bullish. Yeah, that's a perfect entry right there.
Yeah, that's what I try to play those. That's what I look for every day, just about that higher low.
Yep.
Then it confirms it when the green takes out the red. That's my entry.
Yeah.
When the green takes out the red body.
I think it's important. It's important to stress that, right? Where you get a red candle and the green takes it out. I want to use that because, a lot of traders ask me about entries and exits too. So I think it's important to really understand when you see a green candle taking out a red candle, that means all these sellers, remember, there's one component in every trade, a buyer and a seller, right? So you got a buyer, you got a seller that make up all these candlesticks, right? Obviously you have tons of different buyers, you have tons of different sellers. So right here, let's just say you got tons of sellers coming in and now you have way more buyers, right? So that's literally what you're seeing. You're seeing sellers trying to take control of the market, and now you're seeing a lot of sellers that went short here, right? All the sellers that went short here are now stomping out of their trade right here, adding fuel to the fire, right? And just price rallies, right? So once again, just the more you're gonna be, the better trader you're gonna become, a way better trader the more you understand what you're actually looking at. Once like, what is a lower high, right? Or a higher low? That's literally a break and retest. That's sellers getting stopped out of their trade, buyers gaining strength, and yeah, really cool. So at this point, we're gonna run through. If anyone wants to talk about their trades that they took, or any questions, feel free to ask any day. Doesn't matter.
Anyone got trades for review? or questions about the trades that we took?
Yeah. If not, I mean, that's fine. But I just want to leave that open. All right, cool. Well, listen.
I'd like to talk about something real quick, Josh. On that Friday.
Yeah.
On the 2 minute, I guess I think you're an hour ahead of me. It's like 10:30. When it comes down, and it comes and makes that double top.
Right here.
Where we talk about, where it seems like we talk about it every week, and where it makes that bottom, you always mark that, right? And then you come down and it breaks and retests that. I got to stress to people that's a money making strategy, man.
Yeah, that's a fact.
If you can get that down,
yeah.
If you can be an expert at that trade,
yeah,
you can damn near make your living off that trade.
Yeah, exactly. And I love that you say that, Todd, because I used to think you needed, like, trading's complicated, right? So the answer must be complicated. It's really not. If you can simplify all of this and just learn to identify this setup in live time, right? You're gonna crush it. Just like you said, Todd. Like, another reason I love this strategy is it implements so much patience, right? Like, I can't make a trade, right? So I used to struggle with taking early trades. Now I can't take a trade based on this information, right? I need to see a critical level broke with a retest. That's literally it. Obviously, there's other factors that go into trading, but if you can simplify this process and just literally look for these setups, I mean, we just went through the whole week, and we really fleshed out how and you can see these on larger time frames as well. You know what I mean? And if you could just learn to look at these charts in this manner, once again, support becoming resistance, supply becoming demand, breaking reset, whatever you want to call it. It's just really important to get in the habit of seeing it. The volume's going to add a lot, and literally we can't move the market, right? We're little traders, right? So we need to learn to understand what smart money's doing, and then trade accordingly, right? So and for us to do that, we have to identify critical levels and see what they do around them. That's literally it. That's why I'm always saying, let the market paint her picture, right? And if you don't understand the picture she's painting, don't trade. No one's holding a gun to your head. You know what I mean? And it's just it's really important. But
good question too.
Yeah, go ahead.
Yeah.
Regarding that same double top that we were just looking at, so I entered a little bit early as soon as it broke that neckline.
Oh, right here.
And so yeah, exactly. So what you guys, I mean, in hindsight, I thought maybe I jumped the gun a little bit too quick. Where would you guys suggest to jump in on that would be like a better entry after like the second candle closes below that neckline level that's broken?
I'm going short right on this candle. Right? Once this, I mean, and there's a couple different ways to do it. So you see how this candle closes below the green one in front of it? I mean, you can wait for the candle to close, or you can enter right. I mean, there's tons of different ways to do it, and feel free, Todd and Darren, to chime in on this. But it's all on how comfortable you feel with the strategy, right? Because if you wait for this green bar to be ignored, that's a way higher probability setup, right? But at the same time, if you see a lot of volume spike up here and you see sellers coming in, you can go ahead and enter. It's more important for me at least, to identify the retest of that level, right? Just validating the whole psychological aspect behind it.
Vic, what time frame are you trading on entry?
2 minute.
Okay. You say the neckline. Are you drawing it on the body of the candles or those wicks?
I usually go with the wick.
With the wick? Okay.
Okay.
Yeah, I usually draw it on the body, but it depends. The way I enter it depends on that bar that breaks the neckline.
Yeah.
If it's a big bar,
yeah,
I will enter it.
Okay.
It depends on the size of the bar.
Yeah.
But if you miss it, and then I like the red taking out the green.
Well,
like the color change.
I really like what you said there. I like what you said there, Todd, about what type of candle it is, right? So I'm a big 1 hour trader, right? I like to use the 1 hour time frame a lot. And when you get really like engulfing red candles, green candles on the 1 hour, right, into an area of value, right? Like, so I mean, just for instance, right, we get this large red candle into the end of day here on Thursday, right? This was a pretty good indicator that sellers were more in control. Use your candles, right? So and those wicks tell you everything, right? Because if you're wicking, I like how also, Todd, what you said about the body of the candle is where your line's kind of going. It's important because it's where the candle closes, right? Like price can rip right into a retest, but if if it closes below it, that's signaling weakness instead of closing above it slightly with that wick, right? So those wicks tell us everything. These candles are the way the market communicates to us. So yeah, it's really a lot of people ask about entries and exits, and it's going to be different every time, but get used to looking at what the candle before and after look like too.
So for that setup, I always draw my break and retest off the wicks, and I tend to favor the setups where it comes back later and tests that zone. Because in this specific example, you have that green candle that technically does retest that neckline right away.
Yeah.
So that could be your entry there, which
your stops.
I don't love those setups. I prefer to take it when it comes back a little bit later and retest it. And I know that I'm going to be shortchanging myself. I know there's times when it's going to come back, retest it with one candle, and then it's going to sell off. But I don't consider those necessarily my high-quality setups. Will I take them sometimes? Yes, but I prefer the setups where it kind of comes back later, and it's more like an even break and retest.
Yeah.
And then I'll take it off that wick. I draw my break and retest off the wick. So in this situation, I would have waited until it came back like four candles later, 4 or 5 candles later. But sometimes it will just run away from you, and you won't catch it. That's fun.
Yeah,
for sure.
Yeah, and that's the beauty about trading, right? Like you got to just be super formless, right? It's like there's really no perfect way. A lot of people, it comes with, and that's why I always stress understanding the auction as best as you can, because so we entered this trade short, starts to sell off, and we get this chop, and what this is literally just low volume. Buyers defended this level and sellers just couldn't win it. It's literally all it is. And it's a part of the game. And now how I do this is I'm literally holding this level. I want to see, as long as price stays below this, I got to stay in it. But I mean, once you get this large green candle and with volume, I'm out of the trade, and then it's on to the next. So no, very good question. Very good question. All right. All right, guys, listen, it's 11:30. I appreciate everybody taking their time to come be a part of this. This is literally where we make the most progress as a team, as traders. So I I really appreciate you guys coming, and I hope you guys have a great weekend, right? Run through your charts, and I will see you guys on Monday.
Yeah, thank you everyone for showing up. It's been a great recap.
Have a good one.